Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
Ben Laidler of Bradesco joins us now for more. Ben, welcome to the programme, sir. It's been too long. Let's just get to sort of base case, baseline expectations for the next several days. What are you and the team expected to see?
Well, I'm hoping we see sort of more of the same, right? I guess continued uncertainty, but actually no dramatic changes to this sort of backed off tariff scenario. This does feel a little bit like sort of back to reality. Of course, it never went away. We just forgot about it for 90 days and markets, ripped off the back of that. And I think we're having probably a predictable reset here.
Ben, let's talk about how that reset might shape global markets. The bias at the start of the year was to look to international assets and maybe leave the US behind. The US has snapped back so aggressively, so quickly. I think people are questioning that all over again. Where do you stand on the issue?
Yeah, I sort of think the genie's out of the bottle on US exceptionalism. I'm not a bear on the US. I think the US is fine, but I am looking for much more average returns out of the US, these sort of typical 10% levels, not the twice that we've got used to in the last couple of years. And I think the rest of the world looks pretty good here. You still, in most of the world, have this sort of double equity and FX discount. The weaker dollar's clearly helping. And I think some of these countries have real silver linings to a potential restart of this tariff war.
Well, when it comes to the restart of the tariff war and you're looking at all these countries, who are you most excited about? Everyone was very amped up and excited about Japan, but they've seemed to take in less of a priority with this administration than they did just 30, 40 days ago.
Look at LATAM if you want to be excited. Cheapest markets in the world, best performing markets in the world this year. Mexico, one of a tiny handful of countries that still have tariff-free access to the US, and places like Brazil, low 10% tariff, lots of commodity carve-outs, and a market which would actually probably like more of a slowdown potentially coming in from the rest of the world. So it's a big world. There are definitely markets out there that I think would could have silver linings here.
It's interesting you mentioned Brazil because the president was saying that any countries that align themselves with policies of the BRICS could be charged an additional 10% tariff. Brazil is the host country for this week's BRICS summit. Do you think Trump is more emboldened now? It's a question Jonathan's been asking all morning, given the fact that he has had the markets at an all-time high and he just passed his one big beautiful bill.
We're going to find out. I guess that's the one thing I know with some certainty. But yes, the Trump put is definitely not as strong now as it was, when we were down in the hole, 20%, plus ago. I would like to feel it's still in place. I would like to feel, Trump feels he's in a better place. Does he really need to go through that all again? Introduce that level of policy uncertainty, those even greater drags on US growth. I would hope cooler heads prevail, but who knows? We still have 90% of this administration to go.
Ben, investors feel like they're in a much better place compared to where they were a few months ago. Companies, what are corporations doing now, Ben? And a question we asked in the previous hour, have we established how these tariffs will be handled? Will they be passed on or will they have to eat it on margin?
Listen, I think companies are just like the rest of us, right? I think this level of uncertainty, even though it may have come down a bit, is absolutely corrosive to decision-making, to confidence. And I think, everything else being equal, that means that you are hiring less people, you are doing less CapEx. And to your question on tariffs, I think companies have shown us, and the margins are there to prove it, they will pass this on. They will pull that pricing lever at every opportunity.
Ben, which economy, which set of consumers do you think is in a better position to absorb that hit?
well, it's the U.S. consumer that's going to take most of this, right? So the U.S. consumer is in reasonably good shape, but at the margin, this is all slowing, right? So I'm not sure that the U.S. is in the eye of the storm here. I think the rest of the world, whether it's on the economy side with fiscal stimulus in places like Germany and China, or whether it's on the market side with these double discounts on the equity market and the FX, I think international assets and this global rotation has further to go.
Ben, I'd love to get your thoughts on China, because that is something that the president is still working on, more of a bigger grand bargain deal he talks about. At the same time, they have a framework when it comes to export controls and critical minerals. Do you think China is investable?
I think it's definitely investable. We are seeing very strong inflows into Chinese assets. I was just looking at the numbers this morning from the US ETFs. Was like 500 million last week into China, 500 million the week before. So absolutely the money's going in. This is a very cheap market. I think people are betting there's a deal to be done, and there's enough flexibility on the Chinese side they want a deal, and they have the policy stimulus to maybe offset some of the costs to the tariffs they're having to eat right now.
Hey, Ben, appreciate your time. As always, Ben Laidler there of Bradesco. Here's the take from Dan Ives of Wedbush, writing the following: Musk diving deeper into politics is exactly the opposite direction that Tesla investors and shareholders want him to take. Dan joins us around the table. Dan, good morning.
Great to be here.
How much of a problem is this?
It's a huge problem. I mean, it's what we've been talking about, here in the show, for months, that you went from Trump administration, Doge, BFFs. Obviously, there was a huge moment. You had to step back from politics, and that's exactly what investors want to see. And now you poke the bear in terms of Trump, and now you're forming a political party. So the point is, I believe you've now hit a point. I think the board's going to have to get involved, because this is now over. I think there's a line in the sand that he's now starting to cross, and that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path, and I think that's why the stock's reacting.
Let's unpack that. Board involvement. Describe what that might look like.
Look, I wouldn't say it's necessarily an ultimatum, but you cannot keep going down this path where, to start a political party ahead of the midterms, I mean, the amount of work, time, and also you alienate potentially, whether it's Republican Party, whether it's Trump. So now Trump goes from obviously a huge supporter to, is that sort of an enemy or blockade? And I think that's why the stock's reacting the way it is, because the last thing you want to see at this point, autonomous, regulatory, that now Musk goes from front seat in the White House to ultimately you become more of a foe.
When you say ultimatum, you mean the board saying to him, if you continue this behavior, you can no longer be CEO.
Look, I think the board's it's a tricky path, right, for the board. And this is not a board that necessarily has had such a huge backbone when it comes to Musk. But I do think, look, investors, there's exhaustion.
Do you want to see a new CEO?
Look, I want Musk to stay CEO as Tesla, because in my view, Musk is Tesla, Tesla is Musk, the biggest asset of Tesla. But this political journey that he continues to go through, I think it just comes down to investors have hit a point where they want him focused on Tesla and AI. And every time that happens, he just continues to go further and further into the political theater.
He might not be just burning bridges in the Beltway. I want to read you this quote from the Wall Street Journal reporting overnight. Because of the Musk-Trump feud, Beijing no longer views the Tesla CEO as a geopolitical asset and will shy away from publicly courting him. Is he going to have problems outside of the United States as well because of his political involvement in the United States?
Look, it goes back to, if you just take a step back here, it's let's try in a way to almost alienate every aspect of the ecosystem, right? In terms of the core buyer, to now maybe even Republicans, to what you're seeing in China. Look, China, that's the hearts and lungs of Tesla. I continue to believe Musk is an asset there, and will play that sort of, nice in the sandbox. But it does show you become an enemy or a foe to Trump. What does that do in the political and obviously the geopolitical? And I think that's part. Look, that's part of the issue here, is that you start to go into a quicksand situation where I think in the view of investors, there's really no upside. And you can say, okay, if you get midterms and you have some success and he has political power, but that's, independents have never had really success in the U.S., but it's massive risk. That's why the stock's selling off the way it is.
The analyst community is not exactly bulled up on this stock. It's actually very divided. If you take the 12-month consensus price target, the average is about 298 right now, and that's below where we closed on Thursday. How well understood are these risks as they manifest and evolve over the weekend?
Well, I think the risks now, they continue to expand. And I think that's part of the issue is that, okay, here it is, you go back to a few weeks ago, robotaxi, autonomous, Musk 100% committed. Now it's like, hey, over the weekend while eating a hot dog and doing a July 4th barbecue, hey, let's start a political party. Yeah, it's a good idea. Yeah, we're going to do that. So that's, as an investor, it's the last thing and I heard over the weekend, the last thing you want to see is him go down this path. But I think the bigger worry is as he goes further and further down the path, from a Tesla perspective, does that maybe add risk in terms of Trump becoming more of a blockade rather around autonomous and around some of the...
Just describe what that means. What do you mean by that? What could he do?
A big thing is around the federal roadmap in terms of autonomous. I mean, now this is a key few years ahead for Tesla going not just from Austin, but 25 cities over the next year. If you start to put more blockades in terms of things that they need to meet in order to get on the road, if instead of more of a green light, it's a little more of a yellow or red light, that's the worry. That's what the stock's selling off. It's the fear that over the next 6, 12, 18 months, Trump starts to put little blockades in that.
But at the end of the day, the president is looking out for America's interest. If he just does that, it might hurt Elon Musk, but also might hurt the United States when it comes to competition with China.
And that's why we've said the biggest asset when it comes to autonomous is Tesla, because when you think of Waymo's, they're not going to scale at any level relative to Tesla. So when you're competing with China, Tesla and Musk is an asset, no different than Jensen. That's why, look, the hope is at one point, is there some sort of meeting between Musk, Trump? Can they sort of get to some resolution? The problem is every week it gets further and further, and this is not what you want to see. Just think about it in the context of every other tech company, from Nadella, from Jensen, from OpenAI, from Oracle, heading all down the AI path. You don't want to see Musk now going down the political path.
How much time does he have? You've got a price target of 500 in a pre-market right now. We're at 294. How much time does he have to back away from this?
I mean, I think you basically have what I view as kind of like 90 days, 3 months. I mean, I think there's a 90-day sort of, I could see like some sort of ultimatum where if he continues to go down the path, no different than how we view with Doge and Trump, where he basically on that conference call had to back off. This is a, I wouldn't necessarily say a moment of truth, but this is a time now for Musk. He needs to choose. And you can't keep having these one step forward, 2 steps back, 1 step forward, 2 steps back. And that's why the exhaustion is starting to play out in Tesla stock.
Dan Ives of Wedbush. Dan, it's good to see you, sir.
Thanks.
Certainly exhausted by a lot of this. The stock is down by close to 7% in the pre-market. Let's turn back to trade. Treasury Secretary Scott Bessent saying that some trade partners' tariff rates will boomerang back to Liberation Day levels. Joining us now to discuss is Kate Kalutkiewiz, the former White House trade official and former senior USTR trade negotiator. Kate, welcome to the program. Is this the beginning of the end or just the end of the beginning?
Well, I think this is President Trump at his best when he's bringing the pressure and supporting his negotiators. I think this is his favorite time of the negotiations, when he can be extremely maximalist. And I think as a trade negotiator, it helps to have a leader like that pushing for the end, pushing for the negotiations to get over the finish line, and providing that sort of threat that helps his team actually tell their counterparts he's serious.
Kate, what determines whether you get a UK outcome, a Vietnam outcome, a China outcome, or something much worse?
Well, I actually think that's quite an important question. And the Vietnam deal sort of shows that there are two different trajectories here. Let's set China to the side for now, because I think that's a separate type of negotiation. But you have a UK outcome and you have a Vietnam outcome. And I think for the list of countries with which the United States is actively negotiating, you see two different pathways here. One for the more developed economies, probably looking for something like the UK got, and those more export-heavy economies that receive those very high tariff rates. Maybe the Vietnam deal reflects what the Trump administration is putting on the table.
Is the Vietnam deal actually done, though?
Well, back to our end of the beginning, you're right, Anne-Marie. These are framework agreements, and I think you described it perfectly. The truth announcing the Vietnam deal was, I think, quite gleeful. The Vietnamese, of course, later in time said, we still have a lot of things to work out here. But let's make no mistake, this is a really important outcome. The Vietnamese, of course, were on the hook for very high tariffs. They've been, the recipient of the ire of the Trump administration going back to the first time around the increasing trade deficit, particularly as it relates to China. The longer-term play for the Vietnamese, however, is going to be how it manages this very, very challenging place they find themselves between China and the United States. And these will be the details on the transshipment that they're going to have to work out.
When you look at what's coming up this week, the president says at noon he's going to be sending tariff letters out. You have the European Union, the Commission, talking about the fact that the president got on the phone with Ursula von der Leyen. They're looking to get some sort of framework before July 9th. What buckets are different countries in?
Well, I think you've seen the president and his surrogates talk about this smaller set of nations or economies which are much further along. I think the president had been quite hopeful last week Vietnam would be the first of several announcements that day, and you've seen him signal that talks with India are quite forward, that talks with the EU are quite forward. Obviously, he's been a little frustrated with where things are with Japan, but I think these are the countries that we can expect some outcomes this week if negotiators can get a few of these wrinkles, ironed out.
These are also the same countries, though, that, given the fact that they are in these deep talks, will get extensions. And is that what you think Commerce Secretary Howard Lutnick was talking about when he talks about August 1st?
Well, again, I think the president is trying to signal to these countries that they need to stop delaying. He had hoped to have these deals ready last week. I think this new notion of letters going out is really his way of ratcheting up pressure. Typically, when we see tariffs go into place, there is somewhat of a delay to allow importers some time to adjust. So I think we'll still have to see exactly when things are implemented. But I really do see this more as the president trying to ratchet up leverage.
How surprised are you, given the fact that you were a trade negotiator under Trump, that Japan and the European Union have basically swapped fates?
Well, Japan is quite interesting because I think the president was surprised when he got the Nippon Steel deal across the finish line. He probably suspected that would be sufficient to wrap things up. Of course, the Japanese really want to see an outcome on cars, and the president does not seem inclined to deliver that. Then, of course, when you're negotiating with democracies, this is always the challenge. Japan has an election coming up, which constrains its negotiators. So, it is quite shocking, I think, that we've ended up in this place. But this is part of being a trade negotiator with governments which have to be responsive to their own domestic constituencies. Europe, I think, will get across the finish line so long as we continue to have these leader-level discussions. As we've discussed before, the European Union is a very challenging negotiating partner because it does represent 27 different countries. And so if you don't get right to the leader level, you don't get right to these big commercial deals, it's very challenging. So if President von der Leyen and President Trump maintain this dialogue, I think we can get that one finished.
Hey, Kate, appreciate your view. Kate Kalutkiewiz there, joining us on the latest trade push down in Washington, D.C. We begin this hour with stocks pulling back from all-time highs as President Donald Trump reignites trade concerns. Katy Kaminski of Alphasimplex writing equity trend signals are still modestly strong given the volatility and uncertainty in recent months. Katy joins us now for more. Katy, welcome to the program and good morning. It feels like sentiment is quite one-sided now after the massive reversal over the last several months or so, yet people still come on the program and say the pain trade is higher equities from here. Do you agree?
I would have to agree that that's what we're seeing, especially in the market data. What was interesting, though, is we did see a little bit of a pivot last week where you saw small caps and perhaps more domestic focus being in in ahead. And so I'd say that, the general theme has continually been a little bit more pro-growth and positive for equities, which is something I wouldn't have guessed a few weeks ago in particular.
Katy, you're seeing that in equities. Can you say you're seeing the corresponding thing in the bond market at the same time?
Definitely not. I'd say that the bond market has been very tricky this year. We've seen very mixed signals across different parts of the curve. We've definitely seen short signals on the long ends suggesting that yields need to be higher over long term. That may suggest some uncertainty about where rates are going to go over long horizons. But in general, it's been very tricky to trade the bond market recently because there's just been this push and pull between when are rates going to be cut and also just, in general, what are the impact of all these macro themes on fixed income given this?
Are you surprised the bond market didn't get a vote on the one big beautiful bill?
Good question. I mean, I think you haven't seen that much movement. You are seeing some steepening as well recently, like particularly today you're seeing that as well. So I'd say that the bond market is not voting yet. It definitely voted on what was going on in Liberation Day. So I think, we just have to wait and see when, bond investors are really voicing their opinions. But really right now, very mixed in fixed income.
Do you think bond investors are going to be paying close attention to this deadline this week, or they feel like it's self-imposed and already the administration has signaled that a lot of these trading partners are going to get more time to really work out the agreement with the United States?
Well, I mean, if you look at just how much movement you have today and how the market has responded to recent events, it's almost that the market is sort of shrugging off some of this news because nothing is really a big shock. It's everything that we've been discussing along the way, and there's been continual backtracking and back and forth. So I think people are waiting to know the real results before they start positioning themselves for the impact of those potential trade decisions.
Katy, in the meantime, what's working in the commodity market?
Not much, I would say. I mean, I'd say that commodities have been up this month, but there hasn't been big swings. Obviously, people have been following oil and energy in general. But when you look at things like gold, which had also been pretty much on a tear this year, it has been sort of stagnating some as well. So I think, looking for that demand increase that might potentially occur because of having stronger growth is something we're kind of seeing right now this month, that commodities have been up, but it's not particularly strong yet, but it's the potential for a trend going the next few months.
Katy, as I listen to you talk about commodities and fixed income, it just sounds like you're seeing convictionless markets in certain asset classes. Would it be fair to describe them as that?
Precisely. I think what we have seen is strong conviction in equities, a weak dollar, but everything else has been kind of wavering around in sort of anticipation to understand the impact of these trade negotiations, but also just sort of, is the U.S. economy strong enough to actually follow through with this narrative? And that's why I think other asset classes are really really waiting and sort of treading back and forth.
Katy, do you find that difficult to reconcile while we are seeing that conviction in places like equities and in foreign exchange, while you're not seeing the same thing elsewhere?
Definitely so, but I mean, I think these are just at different time horizons. I think equities move quickly. I think the bond market needs a little bit more clarity on multiple economic factors such as trade, as well as, the overall health of the U.S. economy and the job market. And those are a lot of themes to reconcile, particularly with a Fed that hasn't moved yet. So I think bonds doesn't surprise me, but commodities, I think they're sort of in the wake of what I would have expected them to move more just with the tariffs themselves fundamentally, but we still haven't seen that yet. So that I think helps investors be less worried about this inflation concern or other concerns related to trade in the short term.
Stuck in limbo. Katy, appreciate the update. Katy Kaminski there of Alphasimplex.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.